Mike Towers with Coldwell Banker Preferred in Bakersfield, California. Continuing our series of videos on answering the frequently asked questions that I get regarding short sales. And we are currently on question number 6. And this is actually my favorite aspect to why I encourage people to consider doing a short sale. And question number 6 is, what are the benefits to me as a homeowner to do a short sale? Why should I do this? What's in it for me? What do I get from it? What aspects? What makes it worth my while, basically? And I covered 3 points here. Number 1, most of my clients, either they're forced to or they decide to stop making payments while a short sale is being considered. Now, this has to be your decision on what you want to do. I do know that some banks will not consider a short sale until a homeowner is in some form of default, and that means they've missed a couple of payments. So it's totally up to you. But most people that I've worked with who have been able to sell their home successfully as a short sale either couldn't or decided not to continue making their payments. Now, once you're in default and you miss 2 payments, you can't make a payment anyways until you bring it all current, which is those 2 payments you missed plus all the fees. So this is a big relief to people who have a hardship because they've lost their job, or they've gotten cut back on hours, or they're going through a divorce, and the husband and the wife are going to rent a small apartment here or a condo here or a different house, or live with family or whatever, or there's a death in the family. And it's a big relief not having to worry about this. Basically, is probably your largest monthly expense, and it makes a big relief on people not having to worry about that. Plus, they're able to prepare and save to get down payment on a rental that they're going to go through. Sometimes, if you have pets, they require an additional security deposit. You have to pay your first month's rent. Some places even require last month's rent. So be able to get that and have time to be able to save up that money to move on is a big help and a relief to people I've helped out with doing short sales. Point 2, I would say, short sales, depending upon the bank, average 3 to 6 months in approval time. Plus, you have to allow another 30 days or so if the buyer is getting a loan. If the buyer is getting a conventional loan or an FHA loan or a VA loan, it takes 30 days, sometimes up to 45 days to go through the underwriting process, the appraisal, check all the conditions, make sure everything's good, make sure the buyer has their funds in and their complete loan is processed. Takes time. Plus, the bank takes time to negotiate and consider the short sales because they have so many short sales they're backed up on. It just takes a while just to even get to yours. Then they have to send out an appraiser to determine the value of the home. They have to consider the amounts that they're getting. They have to pass on to someone who does the approval. Some banks are very, very quick. Most banks average 3 to 6 months. I had one that the bank took over a year because they took so long. The buyer walked away, and then we had to get another buyer, and then they took too long and the buyer walked away again. So if you're in default, you have under 3 months before the bank will foreclose on your house. And if the short sales take an average of 3 to 6 months plus 30 days for escrow, that will buy you time where you're able to still stay in your home and be able to prepare for your move without being evicted through a foreclosure. And then I would say point 3 is you're able to salvage your credit. Now, you're not able to save your credit, you're not able to fix or repair your credit by doing a short sale. You'll be able to improve your credit afterwards, but you will be able to salvage it versus going through a foreclosure. And the reason is, if you go through a foreclosure, you are typically required to wait 5, maybe even up to 7 years before you can qualify for a home loan again. For a short sale, that's as little as 2 to 3 years to be able to purchase a home again, which is a big benefit to people who are caught in this financial or economic or family hardship situation and who want to move on. And let me show you. Let me give you a hypothetical example here. Say you purchased 123 Banana Street. You bought it for $250,000, and values have come down. It's worth $185,000 now, and we got to short sell it. Now remember, while you short sell it, in 2 to 3 years after your short sale, you're able to purchase again. We still have homes that are going into default. They're going through the default foreclosure process. They're getting foreclosed upon. The bank has to assign that to an agent and get everything ready to go, put it on the market, and sell it. We still have plenty of time where values will probably more than likely still go down from where we're at right now. So maybe 2 or 3 years from now, that home is back up towards maybe 185, 190,000. 3 to 4 years, 200, 210, 5 to 7, 215, maybe 230, depending upon how Bakersfield improves in after the whole foreclosure situation. So how this works in your favor is you short sell your home. In 2 to 3 years, you're able to purchase again. The home that you originally purchased for 250, 2 to 3 years after you short sell it, may be worth about what you sold it for, maybe a little bit more, but significantly less than what you originally purchased it for. So that means you can purchase in as little as 2 to 3 years after we do your short sale a home possibly quite a bit bigger than your first home, and possibly significantly less of a mortgage than you did that other home. Or you can purchase a smaller size home for significantly less in value because all the values are down across the board. Or you can buy the same size house you had but still at less value. So you purchase a home in 2 to 3 years when home values are still low. We're starting to go back up. We're recovering from this foreclosure market that we're going through. We're finally adjusted all the foreclosures away. Well, after that, then home values will stabilize. Then they'll start going up again. And so then a couple years down the road, 3 to 4, 5 to 7 years from when you sell, we'll have the home values back up. You purchase in 2 to 3 years, so 5 to 7 years from now, you're in a home at a significantly less mortgage, maybe even bigger, that has equity. That has equity in the home. Or if you foreclose, you walk away, 5 to 7 years you qualify to purchase a home again, there will be some value in regards to the same size house and what you purchased for it previously, but home values will probably have already gone up a little bit in 5 to 7 years, and so it'll take longer for you to build up equity again. So why not short sell the home, get it over with, start counting down the months until you can purchase again, get in a home, get in a bigger home, get in the same size home, or downsize, whatever your intentions are, for less than what you owe on this house right now. And then a couple years after that, you will build up equity in your home. I think that'll be a big help to everyone here who's having to worry about a short sale right now. Here are the other questions that I'm covering in this series on short sales. Feel free to just click on one of the questions or just go to the next one, number 7. If you have any questions, if you want to see if a short sale is right for you, give me a call, please, 661-616-3601.